Yo, what's good, family? It's your boy Royalty Trades here with a pre-market analysis for the day. Um, this might not be too accurate because we do have CPI that's coming out later on this morning. So I'm gonna do the best with what I have right now, and we're gonna see what way we're gonna make money at today. So let's jump straight into it. Of course, I got the SPY up right now. Looking at the daily time frame, something we went over yesterday was this big engulfing bar right here from Friday. Now, we should be trading in between this high and this low price action until it breaks below or above to take out this actual candle right here and then make a continuation up. And that's what we're going to be hoping for with this data that we'll be getting today and tomorrow to dictate the trend for next week. So as of right now, we've been hugging that 548, 547 range. Keep in mind, Monday we did take puts at 547 and work this way all the way back down to 543. If you caught the video yesterday, you could have played the same thing yesterday around 548 and caught it back down around 543 again. Both of those would have paid nicely. I tried it. I actually tried it one more time going into close, and it just didn't happen. It stayed above this 547 range for majority of the time. But here we are in the pre-market. It's sitting at 547 again. If we zoom in, like I said, you can see it's been hugging around this 547 range going into close yesterday. What we want to see, let's turn my SMAs and my gaps on. What you want to see is this 543.40 level. You want to see that taken out if we decide that we want to drop lower. Because as of right now, we were watching to see if this level here becomes new resistance and pushes the way back down to closing in this 533 gap, or if we're just going to leave that where it's at and make a move to the upside and come up here and retest this 568 level. So I'm still leaning more toward the downside to fill this 533 gap. And if we do, then I will expect to feel that possibly. I don't think we'll drop down to the 515 range. I think that we'll come down here somewhere and then push its way back up to this 547 range. I think this is just a liquidity grab. Kind of like it filled here, dipped down a little bit, and it came back into it. I can see us filling down here, dropping down a little bit, and then coming back up to retest this 534 range, and then back up to 548, 547 with the SPY. So that's what I'll be looking for if, the CPI plays into the favor of the downside. We do have a rise in 200 here on the 4 hours, so that's going to catch it. If we dip below, like I said, you'll see a brief drop here. The 8 SMAs will come down and curl to the downside briefly before it tries to retest and then possibly move back up. It could dip down here towards 516, 517, but I just don't know if we're going to quite make it down that low again. 505, 506. Yeah, we attempted to try to fill that last time around here, but we didn't. We actually took back off to the upside. So we might get that same type of movement today or tomorrow let's just see. But yeah, that's my thesis for this. I think we come back down and retest this 533, 534 level and make our way back up to 549. If the data plays in the favor, we could continue hugging this 547 and it'll make its way back up to this 568 range and retest those all-time high levels again somewhere somewhere around here, 563. So just keep our eyes out. Like I said, this is hard for me to kind of tell which way everything's going to go, especially with the data coming out this morning. So we just have to give some scenarios and see which one fits the narrative once the numbers start moving and the opening bell. So all of these are my little blocks to say where we should head depending on how the price action moves. Same thing with the Qs. We've been hugging around this 548. I tried puts yesterday in the close on that one. I actually posted it. This is a big move down. As you can see, we bounced here off this 449 range and made our way back up after filling this gap here. If we get a curl to the upside, we can see 465. We can see 465. And if we see 465, then we possibly could be trying to flip this here. This would be resistance, but become support. It'll bounce here on an attempt to move back up. If not, you do see the SMAs curling down on the 4 hour. Once this 21 crosses the 200 here, because it is below the 200 on the 4 hour, you're going to see this price action come back down, possibly retest at 449. And depending on the sentiment of the market, we could see this finish filling to the downside around 435. I am keeping in mind that this gap up here, this gap up here around 493, that is still up there, but we are going to have to start flipping some support and resistance here and around here to start pushing to retest those that 490 level. So with the Qs, what we're gonna have to see is, in order for us to become bullish, we're gonna have to see this above this 460 level hold, between 460 and 465 level hold, and then make another move up toward this 480 range. And that's going to be our cue. This area right here will really be our cue that we're going to attempt to move higher if we can maintain this consolidating move here between 458, 459, and 465. If not, we're going lower once these EMAs cross on the 4 hour, and we'll see 449, which will open the door for a possibility down to about 438, 437. So that's what we're going to be watching on the Qs. Tesla. I said yesterday, when the market's stalling or it's kind of dipping, you normally see Tesla make a big move up, consolidate throughout the day, and then the next day it'll just completely just dump off back down till about 212, 210. So what did we see yesterday? A giant move to the upside from this 210 range that we seen Friday. We seen a consolidation Monday, and then another move up to supply around 225 yesterday. Like I said, over here is your supply zone. it starts going into resistance above this level, this 225, 226 level, and that's where it starts to get pressured. It's trying to fill all the way to the upside here around 245, but it's been getting stalled out up to 233. So what's going on with it? It's sitting at 225 right now. So it's going to need the entire market to push to the upside in order to continue filling up to 245. If we just keep getting this consolidated market where half the stock market is red and half of it is green, half of it is neutral, you're always going to get different stocks that's going to move in different directions in order to keep the stock market from actually tanking too much or pushing up too high. So I wouldn't be surprised if it comes back down to 210 if the market does fall. And that's the area where it's been holding most. It's this 210, 211 range. So I'm still not touching it just because of how volatile it is, how much it costs to take calls or puts on Tesla. But if you are watching it, this is what you want to watch for. You'll want to watch for a break above this 234 range. And with the right type of volume, you can watch it keep pushing up. Just a moonshot. If not, you can see it come back down till about 211. And I would watch it if it breaks 210, watch it come down somewhere to this 201, 202 range down here, possibly down to 198. Here's your 200 EMA on the 4 hour as it's still rising up. So it's some support down here coming alongside this 210 and 198 range. But like I said, if the market does pump all in unison, watch it come above here to 233, 234, and a break above here, it can send it flying up even higher into the supply zone over here up to 245, 246. So be careful on those contracts. Like I said, check the theta, check the delta, check the IV. They're massively outweighed. The theta's massively outweighing the delta. So swinging it can put you in the hole, and the volatility can put you in the hole. You really want to be in the money or somewhere that's attainable to be in the money in the near future. So don't go too far out the money on Tesla. Nvidia. I have went back and recharted my Nvidia stock. We're gonna zoom in. I probably need to clean it up a little bit more and take some of these alerts off so it's easier to read. But what we're seeing right now is we're kind of seeing like a curl on the SMAs back to the upside. Like I said, we could have seen 109 yesterday, and we did briefly around here. And then it sold back off back below this 106, 107 range and came back down to about 104. So if you took that put yesterday from the 109 retest, I said it could possibly go up to about 110, 111. But I said resistance is here around 109. And this kind of is the window that we're in here. But from 109 back down to 104, nice payday. Very nice payday. So what we're looking for today, we need to see it continue to hold above this 107 level. We'll continue to see it hold above this 107 level. We could see 109, then we can eventually see it break and come up here towards 110, 111. You don't have a 200 EMA until it gets up to about 114, 115. If it breaks down with the market, we'll see it come back down to about 104 again. We still have this unfilled level down here, down to 103. Um, if it comes down here, like I said, we can retest the lows, come back down to about $100. And this is last Friday's lows. So we could see a retest around here toward last Friday's lows, but we're really going to have to see it break below this 104 range here before making more moves to the downside. So the market is just really consolidated. Some stocks you still see pushing up like Tesla, and then other stocks like Nvidia you see consolidating in a small range, not really giving up too much to the upside, and it's kind of like a coil. If I had Bollinger Bands on here, you'll probably start seeing the Bollinger Bands kind of straighten out and start squeezing with the price action, waiting on an explosion to the up or to the downside. So I around here you can start grabbing long dated calls here just in case with a tight stop loss, because you do see those SMAs coming to start curl and giving it some support to straighten out and then make a move to the upside. If we go look at the 2 hour, it's getting a little help. Most of these EMAs have already crossed the 200 on the 2 hour. The 4 hour, now this is what I am paying attention to. Even though we could retest this 109 here, we have this 21 coming down to meet the 200 here for a cross. This could be an indicator to push the price action lower as this starts to come down. And if it does, like I said, that'll be the thesis. That'll be what it give me an idea that 104 still could be a level that we come back in and retest. And if it continues to drag down even lower, we could see the 200 start curling over here as the 21 starts to come down, and it could drag us down to this 100 level that I've been talking about. So that's what we'll want to watch on NVIDIA. We could see a early curl on the 1 hour back to the upside, or we could see a further drop on the 4 hour where we see this 21 coming down to meet the 200 here, which could drop us back down to 104 and maybe lower down to Friday's lows of 100. The daily is still undecided. We haven't really taken out any candles. It's kind of just it's trading in between different candles. Like we had a nice big move here. It did take out the highs from that massive candle Friday. I hate to see it give it all back today after it's worked so hard to get its way back up here. So we'll just have to see how the sentiment of the market moves as far as tech goes. And last but not least, Exxon Mobil. It happened. It definitely happened. It got all the way up here to 116 that Monday. And then Tuesday, it gave all the money back and it came down and retested the 200 EMA on the daily. So I tried to take calls at 112. It bounced back up to 113 and then it gave all the money back and came back down here. So I wouldn't mind, after I recharted it, I wouldn't mind taking calls around 110. Here we are at 111, 61, trying to hold here and possibly make another move up. The same elevator drop here, we can have an elevator move back up or a staircase movement back up, especially if the market is going to be chopped in both directions. If it doesn't hold this 110 level, then my next line of support would be around 102. But I would like us to see and hold this 110, 111 range and probably consolidate here, grab calls, and then once the market stabilizes, this can grab this 111 range and make a move back up. Move back up where it still has room to 120, and it made an attempt over here around 119, but as you can see, we started gapping down and it started taking some of the money out. This is the supply level that got us here, trying to trade up into that 116, 117. So in order for it to keep pumping or pushing, you have to see a move up and then a gap above these supply zones over here in order to continue to build. Last thing you want to see is a gap down in these ranges, because that'll be a indicator that we will probably want to push lower down to this 102 range. But as long as we open up fairly flat and hold it, we could see another move or attempt back up to about 116. While like ExxonMobil, the contracts are fairly cheap. The delta and the theta is normally fairly in check, and you can make some good money and not have to spend a whole lot trying to take options calls on ExxonMobil. So that's why I'm adding that in there, because I know that I need to find decently priced trades for y'all, so that way everybody will be able to make some money regardless of what we trade. And I'm keeping the window for what all we trade kind of tighter, so that way we just not looking at Walmart, we looking at ExxonMobil, Amazon, Microsoft. If we keep trading these 4 or 5 stocks, hopefully y'all can be able to kind of get the grasp on the price ranges, and it'll become second nature on, all right, I need to get in here, I need to get out here. It's all about rules, it's all about consistency. That's how you really make money, and that's how you have a long career in the stock market. That's what started working for me, just trading Nvidia every day, every day, every day. I got the repetitive motion of where to get in and where to get out week by week, and that's what works. So feel free, please sub if you're new to the channel. Of course, like the video, support your boy. I'm up trying to give guidance and visuals along with the pre-market type up for everybody, so that way we can have a map to navigate this market day to day. Because I know we're in a period to where this could be exhausting, especially if you're not used to this. And normally we see this exhaustive cycle in the stock market. Before the market moves back to the upside, it gets everything out of retail, kind of takes their money, and then institutions that have that big portfolio money, they're just waiting us out. So we're gonna make money. We're not gonna lose it. I'll see y'all in a little bit. Be typing up the pre-market analysis, and we're gonna get in and we're gonna get out, and we're gonna put some money in our pockets today. So I'll see y'all on the other side. I appreciate everybody tapping in, and let's get to it.